Hello and welcome to the trade of the week beginning Monday, the week starting 13th of June. Last week's trade of the week was to go long the S&P 500, and I've got a daily chart here which is showing you the reason for this trade. And basically we had a consolidation phase and we expected a little further upside to be seen in the S&P 500. But what actually happened is that the market has traded sideways, didn't make a new high, instead fell out of bed when we received the US CPI data at the end of last week, which came in a much stronger 8.6% year on year than expected. So the trade of the week last week was to go long at 4,155. We had a little bit of upside after that, but as I said, the market just went sideways, and that's why we had a very tight stop at the last reaction low, which is basically a low lower than the previous candle and the one after it, and this was made at 4,074. So we went long at 4,155 and we put a stop loss in at 4,070. And this is why we have stop losses, so that if we get it wrong, we lose as little money as possible. And in this case, what we should have really done is to have a stop and reverse order in place where we reverse a position when it goes against us. But anyway, we had a small loss between 4,155 and 4,070, which came to about 85 points. But when you compare that to our trade of the week from 2 weeks ago, when we went long the DAX and where we made over 600 points, it's actually not such a big problem at all. Let's move on to this week's trade of the week, and it is to go short the gold contract or gold spot prices. As you can see here on the daily chart, today we have risen intraday to $1,877 per troy ounce. And since we failed in this sort of area again this morning for the third time in as many weeks, we believe that a reversal to the downside within this trading range, back to the lows of this trading range, is likely to be seen. So today's trade of the week is purely technical, not fundamental. The price of gold has risen because of the risk-off sentiment we've seen over the last 3 or 4 days, and it is coming off again this morning, even though equity markets are very, very weak, and even though bond markets and yields are rising in the US. So our trade of the week here is to go short gold at $1,858 per troy ounce, with a stop loss at 1,878, just above today's high, and a downside target at $1,810.